Is the GME and AMC party already over, or is it just getting started? We're down more than 50% in the last 2 days, after we went up more than 270%. Don't worry, we will analyze everything that is to analyze here. So without any further ado, let's go. Welcome back to another episode of Phil Prince, your one and only stop for crypto, finance, and trading. So this is the GME chart. This is 2021, the big pump, and this is what we have right now. I already went into all the details how this happened and how this happened as well. I will link it right here. Today we want to focus on how this could turn out in the short term. Now, in my last video, I told you, please be careful. This is super risky stuff here. This is the same as buying any crypto meme coin. Volatility is crazy. It is unpredictable. And therefore you have to be prepared with your investment here. And most importantly, don't be too greedy. Doesn't matter if it's here or if we are up here, because greed in the end will make you watch your investment go down from plus 10x to minus 99%. Therefore, I also told you in my last video, and we were here at this point, don't immediately buy in here. After this initial pump and roaring kitty posting on Twitter, people are already going nuts. And these kinds of extremely fast trend shifts are not healthy. And they indicate that there has to be some kind of breather or correction, which ultimately is exactly what we've got here. Once again, from this recent top here, we're down more than 50%. Also, don't forget, last time we had this, Wall Street wasn't really prepared. If you want to know about the whole story, watch my last video. Also, there's a movie called Dump Money, covers the whole story, quite interesting as well. Long story short, we got a short squeeze, better to say a gamma squeeze, price pushed higher and higher, stupid big short positions and put options were wiped out, liquidated, and it pushed price higher and higher. Now, will we repeat this story again? Will Wall Street short and short and short? Well, we will see. That is impossible to know right now. Therefore, as this is super risky, we have to look on the lower time frames. You know, if you're subscribed to me for a longer time, I really like the 4-hour chart. Of course, also the bigger time frames, daily, weekly, monthly, and rarely we go even lower, meaning the 1-hour chart and even below that. That's mostly for day trading. But in cases like this one here, price is so vertical that we cannot analyze this on the 4-hour chart properly. And you can see on the 1-hour chart, it's better, but still not perfect. We don't really have any touch points here with very, very important moving averages. Now, if you go down even lower to the 15-minute chart, you can see that things are a little different. Here we actually have textbook retests on these moving averages, the golden one and the blue one. By the way, if you want to have these, I have very good news for you. Just join my Telegram group, which is linked down below, and then you will get access to my Phil Prince community, which is still free. With this, you will get my indicator, a 1-hour trading course that explains everything you can do with it and how to build your own strategy and much more. So make sure to join now while it's still free. This may change for new members in the future. Now, if you've done that, you will see that you are now able to beautifully see these retests on the 15-minute chart. Not only the bullish ones, but also the bearish ones here. And if you're approaching this from this kind of standpoint, then you're not just buying in and hoping for the best, but you can actually see when it's best to buy in. You can see when price is reversing and it looks not as good anymore, and you can act accordingly. So maybe also only trade these swings here. That in the end is up to you. If you're super bullish on this, although it's risky, I have to emphasize this, many people are not aware. You can of course use these kind of retests to scoop up more, build up your position, but as this is a meme stock, please, this is more like a lottery ticket. Any kind of weird news or tweet can completely change the fate of this rally here. One more thing to monitor, of course, is the Twitter account of Roaring Kitty. And what's interesting at the moment, and you should know it already, but he's posting memes all the time. Actually, highly exquisite memes. In the last days, he was posting memes around every hour. And at this very moment, it's actually every 15 minutes. I know this is highly speculative, but maybe he's trying to tell us something. And as there's so many people following him religiously, and they put all of their hope into him, it might be that we're looking at a self-fulfilling prophecy here. And that means, while he is posting memes, price will still pump. Of course, not immediately. We're seeing a big decline right now, but it could indicate that the party is not over. One more thing on the lower time frames we have to monitor before we go to the higher time frames and see where this rally could take us is if we pull up the volume profile here, you can see that we are right now in the point of control, which coincides with these super important moving averages. But below that, there is nothing. There is a big gap. And this is mostly because price opened here because of pre-market trading way higher. This led to this big gap here. And if we close below here, then we will most likely go down here like a knife through butter. And this will basically reverse the whole move because the next point of control and support is right here. So for a bullish continuation, it would be pretty good if we hold this level. Now, when we have a look at the daily chart, meaning at the bigger time frames, and compare the 2021 rally to the current rally, we can see that the parabolic phase started after this consecutive uptrend. At this point in time, it looks like we got the parabolic phase right away. But once again, the smaller time frames, you can see that we actually had this consecutive uptrend, just smaller. And this is a parabolic phase. So either this is kind of an echo bubble, repeating the pattern of 2021, but way smaller, or, and this is the super bullish scenario, we're looking at this here. So we're currently at this phase, if you want to compare it. Of course, all of you should know past results are not indicative for future results, but still, in financial assets, we can see patterns repeating over and over again. Not exactly the same way, but it gives the same vibe. Now, if we measure this move here with the Fibonacci tool, you can see that we basically had this first correction here, right in between the 0.382 and 0.5. From there, we pumped up and had this zigzag pattern over and over until we started in the parabolic phase. Now, if we have a look at the current pump and measure this move with the Fibonacci tool as well, you can see that in this very moment, we're sitting between the 0.382 and 0.5. So pretty much exactly the same. But for this scenario to rhyme, we have to make a local bottom here. And as I explained prior to that in this video here, this is actually possible if we don't break below this level, because then we will go down here pretty fast. Also, one more important thing to mention is, I already said, is it likely that Wall Street will make the same mistake here again and let this happen the same way it did here? Well, what if Wall Street hoped for this kind of scenario once again so that it can jump on this train as well and ride it up even higher? So what then would happen is retail is getting even more greedy because the bump is even more parabolic and even stronger. But Wall Street, the whales, the smart money, however you want to call it, is on the same train. And at some point, they will take profits. And then this time around, retail will be the exit liquidity, which normally is the case anyway. And this way, they kind of will get the money back that they've lost here, because they were squeezed multiple times and lost billions and billions of dollars. So if this indeed goes up, be prepared, be careful. This would be a dangerous scenario for retail. Don't just diamond hand this. Every time this makes a crazy move, sell some of your back. Let it be 5%, let it be 10%. That is up to you. But that would be indeed a smart money approach. You're selling into the rally and at some point you exit completely, or you leave a little percentage to just play with it and see where this will take you. Also, one more thing to look at. Where could we top out here? Well, if we measure top to bottom before this parabolic move of 2021, you can see that we exactly hit the 1.618. And if we do the same this time around, then the 1.618 will be at $563. This would mean from current prices, 1,832%, meaning more than a 19x. Now, I don't say it will happen, but this would be the same multitude compared to the scenario of 2021. Now, if you want to learn how the smart money thinks and adapt a smart money mindset yourself, so you don't become exit liquidity again for the smart money, make sure to subscribe right now to this channel so you don't miss any of the next videos. As always, this was not financial advice. Please always do your own research. This was Phil Prince for you. Until next time, crush the markets. Goodbye.